Management on the show, though. Emami, that's a stock in focus. Remember, the stock is up close to around 80% in this calendar year itself. Emami, well, they recently acquired the remaining 49.6% stake in Helios Lifestyle, which is known as for its premium men's grooming brand, the Man Company. Do note, Emami already held close to around 50% stake in Helios. To discuss this and more, we have Mr. Bhansali, the CEO of Finance, Strategy and Business Development and CFO, who joins us on the show. Hi, Mr. Bhansali. Good day and thanks a lot for taking our call. Well, give us some details with regard to this. You already had more than a little over 50% stake in the company and you've gone and bought the remaining 49.6% stake in Helios. Could you tell us at what valuation has this deal been done?
So we are, has already been announced as well. So it is at agreed to acquire the balance shares at 177 crore odd.
177 crores. Got it. For the first quarter, we have numbers of the Man Company and Briller, which grew by close to around 23%. Could you tell us for TMC, what was the growth?
So the growth with that is also aggressive. And both TMC and Briller both are growing aggressively. And as you might have witnessed, last year also we have crossed around 180 crore kind of a turnover, and we are a bit positive on the Man Company.
Okay. All right. So 180 crores is what you did in FY24 for both these two entities?
No, just the Man Company.
Okay. Just the Man Company. Got it. And currently, I understand that TMC and Briller, both of them put it together, they constitute close to 7 to 8% of the total revenues. Where do you see this number headed?
No, it would be around the Man Company is at around, since we are at 3,600 crore on an overall on an last year FY24, and would be around 5%.
Yeah, but okay, so 5% is only TMC, while Briller would be the remaining 2-3%, right?
Around, yeah, maybe 1%, 1 to 2%.
Got it. Okay. So TMC from 180 crores, where do you see this number going? You must be having a vision that you've gone ahead and bought the remaining 50%. So where do you see this revenue number scaling to as a percentage of the mix, what it could get to? And EBITDA positive is what it is, but when do you see the margin, say, move to mid-single digits or double digits?
So we are very optimistic. The opportunity is huge for the male grooming, and particularly male grooming in the premium and niche segment. And we are at very appropriately positioned. So we expect a kind of to reach around 500 crore over a period of 3 to 4 years. And expect this to carry it from there also. We are very bullish on the opportunity.
This is only TMC, right? 500 crores?
Yeah, I'm talking only the Man Company.
Okay, you're only talking about the Man Company. But this grooming segment, this male grooming segment, sir, how much is it growing at in terms of a pace?
So it is, as a category, is growing in double digit. And
so
we are, as I said, that we are appropriately placed and we want to beat the category growth.
Okay, so tell us, what is the category growth and what do you want to grow at?
So it's very, as I said, no, over it. So what I would narrated is a directional growth of over 3 years. So it could be somewhat here or there, but over 3 to 4 years to grow aggressively to reach kind of a 500 crore kind of a target.
What is the cash on books now for you all post this acquisition that you all made, or your complete buyout of Helios?
So currently we are in the cash of around 500-600 crore kind of, and this would be a payment of less than 200 crore, and that also over a period of 1 year.
Okay, and this is going to be funded via your internal accruals?
Yes, yes.
Okay, and what is your acquisition strategy going forward now in this category as well as other categories?
So we are always, we will continue to remain on the lookout for strategic investments and also full-fledged acquisitions, kind of the way we did for Cash King or Dermicool kind of acquisitions, or Cream 21 for that matter. And we recently, in last 4-5 years, we invested in many opportunities. The first one was the Man company, then Brillare, then in a pet care company, then in a juice company, and also nutrition-based company. So these are all strategic investments which will nurture and grow. We will grow along with them, and over a period, if the things go well, we may acquire. And as for the comfort of each other, ours and that of the promoters, we may acquire them over a period of time once the business comes to a size.
Okay. So now, Mr. Bhansali, since we've spoken about this acquisition extensively, since we have you with us, just wanted to touch upon the whole situation with Bangladesh. We do understand that you get around maybe 5 to 6% of your revenue contribution from there. And correct me if I'm wrong, but what is the situation right now? Has there been a formidable impact in terms of sales from that particular region for you all?
So while there had been some impact in 1 month or 1.5 months, in fact, there had been the disturbances from the last year itself when the elections were declared and all, the last quarter of the last fiscal. But despite that, we had grown, and our business, there was some disruption in July and August. But now the things have resumed. Now we already have a manufacturing plant over there as well, and that has also resumed the operations, and the marketing activities and the distribution is also happening. But I believe that the stability will resume once the new government takes up the charge, and there would be something on an economy level. So stability is what is expected, but otherwise our market share and the distribution, the products, everything is intact, and we are all full of growth going on from here.
And you get 5% of your revenues from Bangladesh?
Very difficult to say very precise. How much was it? Maybe around 4-5%.
4-5%. Got it. Before we let you go, I just want to clear the air with this male grooming segment. What is the total size? I think you were saying that you're going to go to around 500 crores in the next 3 years. But as of now, how big is the market? What is your market share, and where would you like your market share to go to?
So you may not get kind of a male grooming per se. So within this, there are so many categories. So if you look at
the segments where you are present, Mr. Bhansali, where you are present, if you could tell us.
So we are present in many categories. So male grooming is an overarching category, and within this, then there are hair care, skin care, beard oils, from beard to all this taken together is huge market, right? And so it is only a segmentation which has been done just to suit the price positioning kind of a thing. Otherwise, it's a huge market. Look at the established players also. So the idea is not only to take up from the existing startups, but also to take market shares and to grow the market shares, to grow the business from the established and the young generation, established markets and the young generations as well.
Okay. Just before we let you go, Mr. Bhansali, just wanted an overall picture in terms of what we can expect in Q2. Are you going to see any kind of impact in terms of your P&L because of the Bangladesh situation in your Q2 numbers, say in terms of revenue or EBITDA? And secondly, would you be holding on to your entire FY25 guidance of around 5 to 6% volume growth with a 1.1 to 2% price increase and 26 to 27% margins? So Q2 as well as FY25.
Yeah. So while there are all these things are there in the public domain, but just again to reiterate, we do not expect a substantial impact on our results because of the Bangladesh. And because the international market, while the challenges are there across markets, but we are taming them, and we are full of coming out with appropriate growth in the international business overall as well. And we continue to have our guidance of what you said would be a volume-led growth of 5-6% overall.
Pleasure talking to you, Mr.
And the
Bhansali.
EBITDA margins are also good.
26-27%.
I hope I have replied to all your questions then.
Absolutely. 26-27%, right, is the margin.
So it is hovering around that. See, the idea is we do not bind ourselves by the numbers. In fact, if you feel that there is an opportunity, you tab it. We do not have any binding like this. Right? So we are very flexible. You want to take the opportunity, and if we feel that there is no opportunity, then there is no point spending. Then conserve. and get the
Okay.
profit. So, but the objective is to have a profitable growth.
All right. The objective is to have a profitable growth. Thanks, Mr. Bhansali, for taking the time out and speaking to us and giving us all of that perspective. And not to mention, they're sticking to the 5 to 6% volume growth. Don't expect any kind of impact in Q2 on account of the Bangladesh situation. And the male grooming segment, Nigel, I think you'd be better placed to talk on that.
Up and kicking. I mean, wow. Big opportunity there.
Huge opportunity.
Huge opportunity. I mean, they did 180 crores last year, and they're talking about doing 500
crores
in 3 years. You know, so you're talking about the revenue going up by close to around 3x. So.
We have one candidate sitting right here.
Yeah, I mean, absolutely. But that's about that. And I think as, Mr. Bhansali was speaking to us as well, and he detailed the outlook from here on, I think the stock as well has moved to the high point of the day. Keep in mind that Emami was actually an underperforming till a few months ago. And in the last few months, it's been the biggest outperforming FMCG stock currently at the high point of the day as we speak. Well, we'll slip in a short break. On the other side, we'll focus more on markets. And on HAL, that's another stock that's buzzing in trade. Stay with us.